Coming up on Market to Market, El Nino's impact on long-term drought is welcome in the West, but damaging in the Delta. And the Senate says no to a bill that would label the food you eat as genetically modified. Those stories and market analysis with Ted Seifried next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, March 18 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. The unchanged melody rang out from the Federal Reserve this week. The board decided to keep interest rates in place, saying only 2 increases are likely in 2016. Several global factors and a less than vibrant domestic picture contributed to the decision. The dollar fell to nearly 5-month lows on the news. U.S. consumer prices fell 0.2% in February as energy held the sector back. However, core inflation did squeeze out a gain, driven by clothing costs. Energy also played a factor in keeping retail sales down, which declined 0.1% last month. Analysts say consumers remain cautious about spending despite steady hiring, and Americans apparently held on to savings at the gas pump. The Rural Main Street Index went up in March to 40.2, but still lags below growth neutral. The Creighton University survey revealed lackluster farm equipment sales and lower farm and ranchland prices as factors. And what you pay at some grocery stores may be going up as well in states with new GMO labeling laws. But the range of estimates vary, just like the impact on the food companies and consumers. Many farm commodity groups vowed to head off a potential patchwork approach to GMO labeling that critics call unnecessary. Peter Tubbs explains.
On this vote, the yeas are 48, the nays are 49. 3/5 of the senators duly chosen and sworn not having voted in the affirmative. The motion is not agreed to.
The U.S. Senate failed to move forward on a bill Wednesday that would have trumped state laws requiring the labeling of genetically modified ingredients in packaged food. Senators voted 48-49 along party lines, falling short of the needed 60 votes to end debate and bring the bill up for a vote. The food industry backed the proposal, which would have preempted a Vermont law requiring GMO labeling. The language would have made labeling of GMOs voluntary and enforceable by the USDA. The Green Mountain State law goes into effect in July, and other states are considering similar legislation. Senate Agriculture Committee Chairman Pat Roberts helped advance the bill out of committee last week and was helping to seek votes to pass the measure.
Or it is a market issue. This is really about a conversation about a few states dictating to every other state the way food moves from farmers to consumers in the value chain. We have a responsibility to ensure that the national market can work for everyone, including farmers and manufacturers and retailers and, yes, consumers.
Opponents of the bill charge that it favored manufacturers and retailers over consumers, and that states should be free to experiment with labels that give the public information they currently lack. Oregon Senator Matt Merkley wrote his own labeling bill that has yet to make it out of committee.
So if we take away the right for a state to give the 1-second test direct information, 1 second, turn over the package, 880 calories, that's the test. Turn over the package, G ingredients are present, thank you. That's the 1-second test. If we're going to crush the ability of a state to respond to a fundamental concern of their citizens, then we need to provide the same basic provision, not in a scary fashion, not in a fashion that takes up space on the package, not on the front of the package, one standard for the entire United States.
the Food and Drug Administration has deemed GMO food safe for human consumption, and the scientific community has few concerns. The majority of the country's corn and bean crop are now GMO, which results in 75 to 80% of processed foods containing GMO ingredients. The American Farm Bureau expressed its displeasure in this statement. To say we are angry with those senators who abandoned farmers and ranchers and turned their backs on rural America on this vote is an understatement. The calendar is now working against the food industry. It is unlikely that Congress can move a bill through both chambers before the Vermont law takes effect in July. But congressional leaders insist they will try to bring consistency to what could quickly devolve into a patchwork of state and local regulations.
I hope that we can still preempt under the constitutional power of Congress to regulate interstate commerce, so we have one rule for all 50 states.
A House-approved version has to be endorsed by the Senate. For Market to Market, I'm Peter Tubbs.
NOAA and NASA both called February's global temperatures the most abnormally warm on record for any month, due in part to a strong El Nino and warm sea surface temperatures. The change in patterns has helped reduce drought conditions in California, and the state will be able to ease mandatory water reductions. Now farmers and other customers will be provided with 45% of the water they requested for the year. And just in time for the first day of spring, a powerful nor'easter is making its way up the East Coast this weekend, while a deluged delta is trying to stay above water. Pacific weather systems pummeled the West Coast this week, bringing much-needed rain and snow to the region. A steady stream of El Nino-related storms brought rain this winter to parts of the Golden State at lower elevations, and 1 to 2 feet of fresh snow to the Cascades and parts of the Sierra Nevada mountain ranges. Snowpack in the area was close to above average for the season. 4 straight days of rain have helped replenish several key reservoirs in California.
The good news is that the rains of the last several weeks have done a tremendous job at refilling some of the biggest reservoirs in California. Going into March, we were way below normal in reservoir storage and the amount of snow in the mountains, and with the recent storms, we're pretty much up to normal, up to average for this time of year.
Ample snowpack and full reservoirs in Northern California are critical for the state, as rainwater and melted snow eventually flow to the Central Valley and densely populated Southern California, which has received little rain this winter.
The bad news is average isn't good enough. We've had 4 incredibly dry years, and it looks like this year, even with the average amount of rain and snow we've gotten, isn't going to be enough to end the drought.
To date, 99.6% of California is locked in some sort of drought. The last time that threshold was below 90% was in March of 2013, when the state was 3 years into one of the worst droughts in its history. Meanwhile, in the South, Louisiana and Texas residents are asking for less rain as flooding engulfs areas around the border the two states share. Thousands of homes have been evacuated as the swollen Sabine River reaches levels not seen since the 1880s.
No, we're good.
The flooding has claimed 4 lives in Louisiana, and officials predict it could be a week before displaced residents can return to their homes.
People need to remember about the possibility that the water could continue to rise for another day or two.
The pattern has also slowed field work in the Delta as corn planting is lagging behind schedule. In the upper Midwest, up to a foot of snow teamed up with strong winds and heavy rains plaguing parts of Minnesota and Wisconsin that are already dealing with widespread flooding.
Floodwaters resulting from the rain last night and snow melt and the ground being frozen. Everything kind of runs through this area and flows down the Big Red River, and it just kind of backs up right in this area.
The picture in other parts of the Midwest was a bit sunnier as the result of a more mild winter. Officials predict an early start to planting thanks to warmer soil temperatures and favorable moisture conditions. But early planting hopes could be dashed as forecasters call for a cooler trend that could dampen any early planting parade in the plains later next week.
Next, the market-to-market report.
Slight weather concerns caused little March madness for the grain trade as speculative short covering earned the assist. For the week, wheat supplies hit 20-year highs, pushing the May contract 13 cents lower, while the nearby corn contract rallied 2 cents. The receding dollar helped push the May soybean contract 2 cents higher. May meal bucked the trend, declining $6.70 per ton. In the Souths, the May cotton contract expanded a penny per hundredweight. Over in the dairy parlor, April Class 3 milk futures increased 24 cents. In the livestock sector, the April cattle contract moved mostly sideways with a 2-cent gain. April feeders were off 53 cents, and the April lean hog contract declined 38 cents. In the currency markets, the U.S. dollar index fell to nearly 5-month lows and lost another full percent this week. The April crude oil contract hit a 3-month high, finishing 94 cents per barrel higher. COMEX gold dropped $5.10 per ounce, and the Goldman Sachs Commodity Index rose nearly 4 points to settle at 335.20. Here now to lend us his insight on these and other trends is one of our regular market analysts, Ted Seifried. Ted, welcome back.
Hey, thanks for having me.
Interesting week in the currency markets. We saw this dollar continue its downward trend. How much lower can we go here with this Fed report out of the way?
Well, the Fed was a little bit of a shock. Not that they didn't change rates, but the fact that they went from the language of 4 rate hikes in 2016 to 2 rate hikes in 2016. So unless they change that again, it ends up being 1 or none in 2016, I think the weakness in the dollar could be fairly limited at this point, mainly because you have a lot of central banks across the world, Japan and ECB in particular, that are looking to still add stimulus. So when we're the only country in the world talking about higher rates and everyone else is talking about stimulus, it makes it really difficult to see that dollar continue to slide and continue to go lower. But, we'll see how the policies of the rest of the world kind of develop, and we'll see how aggressive we get here throughout the course of the year.
Okay, well, let's jump into the wheat market. Even with such a weaker dollar, we still saw wheat off 12 cents on the week in the nearbys. Yeah. What does that tell you heading into this next week?
Well, a couple things for wheat. One, news midweek that there was a vessel of Argentinian wheat on the way to the eastern seaboard really kind of struck a chord with the wheat market. We have very big carryovers here in this country, globally as well, but domestically we have very big carryover. It represents 46% of a yearly production number. It's huge. So the last thing we really need is to be buying wheat from Argentina. But the fact that it pencils in with the lower shipping costs, which is mainly due to lower crude oil, to the eastern seaboard rather than coming from the plains of the Midwest, that's concerning. Wheat had a problem with that. The other thing too is that we were kind of building in a little bit of a weather premium for wheat. We had been getting dry in the plains. We had been getting a little concerned about that. We were also concerned about a cold snap hurting wheat up further north. But as the week kind of moved along, the weather concern kind of faded away. On Thursday, NOAA came out with their 3-month forecast, their longer-term forecast, had some more rain in there for the plains, had mostly normal to above normal temperatures, but normal precip, and that took some of the steam out of the wheat market, but also a little bit out of the corn market as well.
Okay, so technically here on the wheat side, do we expect another down week here in this next week?
That's a very good question. I mean, we've done a lot of the heavy lifting possibly the last 2 days, towards the end of this week. You wonder if weather might look a little different when we come in on Monday. Maybe we can find some footing. A lot of the worst news for the wheat might have been already factored in with the fact that, we have these very big carryovers both here and abroad. There are some issues popping up with India. I'm wondering if we can find some footing somewhere relatively soon. But we might start the week on a lower tone next week.
All right. Well, let's talk about this corn market. We saw a little bit of an increase, a little bit of volatility this week relative to where we've been.
Right.
Up 2 cents. What are your thoughts here, again, as we look at this next week?
Well, we've had a very nice bounce off the lows. We're not going to call it a rally. We're going to call it a bounce. And we've run into some very key resistance here. So the question is, what's the catalyst to extend that? And for me, it doesn't really seem like the right time frame to do that. With these March 31st reports that we've got coming up, you do have 2 potentials there that could help corn with a rally if, certainly if acreage came in lower than expected for planting intentions. But the quarterly grain stocks number I'm wondering if it's going to show a little bit stronger demand for feed. I'm wondering if maybe quarterly grain stocks comes in a little bit below expectations. So maybe then we have a reason to continue to go higher. But at least for the moment, I think we kind of hit our upside objective. Now should be a time where we kind of take a little bit of a break, pull back a little bit, and maybe kind of trade a little bit sideways until we see that report. If we do continue higher in the next couple weeks, that's saying something completely different. I think that's saying the market is now getting very concerned about this upcoming growing season and the weather, and adding a bit more of a weather premium.
Okay, and that kind of leads us right into our question here from one of our Facebook followers. This one's from Troy in Montfort, Wisconsin. He's asking how much more volatility could be added to this corn market before we hit that planting intentions report. This early in the year, can weather drive enough of a premium that we could see some bigger moves in this corn market?
I think the only thing weather-wise that can do that is if we continue to get worried about planting delays. If the Delta keeps getting rain, or we come in next week and there's more rain in that forecast, then we'll have reasons to trade an upfront weather market rather than a lot of the deferred weather talk that we're talking about El Nino to La Nina and the warm fall into winter that we've had, the Great Lakes ice pack. I mean, there's a lot of very compelling weather talk out there, but that's for further on down the road. It's not necessarily for this next 2 weeks. The next 2 weeks is only going to be about if we're really wet and really start getting into a situation where planting delays continue down in the south and start creeping up further north, then that might have a factor.
All right. Well, in the soybean market, we did see a couple impressive moves this week. We saw the nearby go up over $9 for the first time in a May contract since December. Talk to us about, do you sell this rally? Even though we closed a little bit disappointingly on Friday, what's your approach here in old crop beans?
Old crop beans, we made some sales throughout the week here, and we've been recommending making some sales throughout the week here. I think, again, same story with the corn. While I do think that we could see some higher prices in soybeans down the road, I wonder if we've done most of that work for now, and then between now and that March 31st reports, we might see a little bit more of a pullback. And there too, we're running into some very key resistance. So. We were recommending make some sales, especially on old crop beans, and looking to see if we pull back. The acreage conversation that we have going on right now, we continue to hear, it's really a very interesting debate because there's a lot of conflicting factors that are going on right now. And this year, maybe more than the last 3 or 4 years, it's very difficult to pinpoint acreage. That's why you've got a very wide range of guesses. But I think very likely we're going to see some big bean numbers as far as planted acreage. And that could keep a little bit of pressure on us now as we get ready for that report. So the Brazilian real, at the beginning of this week came off its highs very sharply. By Wednesday, it had found a bottom and it was bouncing back up. That Fed announcement came out at just the right time. It pushed it even higher. And now we're bouncing back in the real. That's certainly helped bean prices here for the end of this week. But you wonder if that real has much more upside from where it is right now. And I'm going to call this sort of a real bounce in the soybeans. And I think it is meant to be sold in the short term.
Both old and new crop? Would you be unloading a percentage of new crop beans at this point?
A percentage of new crop, but we're not very aggressive on new crop quite yet. We'd like to see some more weather premium get added into the market, and I think we will see that over the course of the growing season, maybe once we start getting into planting a little more aggressively.
All right. Well, now let's talk about this livestock market. We had a disappointing close to the cattle trade on Friday. Also had a cattle on feed report out this week. Bearish news in the cattle on feed, 110% placements, 105% marketings, 101, 102% cattle on feed. How does that set us up for opening this next week?
Well, it wasn't a bullish report. I mean, it would have been nice to have a bullish report after a big down day, limit down feeder cattle. So we didn't get the bullish report. But you wonder, with the big move that we had here today, and even the reversal off the new recent highs that we had yesterday, which was kind of setting us up for today anyways, you wonder if we may have factored some of that in. And even though that report came out a little bit more bearish than expected, it was still expected to be a bearish report. So buy the rumor, sell the fact to some extent. I mean, we got confirmation of something that we were expecting and maybe a little worse. So I think we will start under a little bit of pressure early next week. But you do wonder if we were able to find some footing. Technically speaking, we're still in a very nice uptrend. Maybe we can find some support and turn this thing around by midweek or so.
if we do get this, let's talk live cattle turned around, what is kind of a price range you'd be expecting here for end of the week trade? Can we get back onto that uptrend we were on here through Wednesday?
Yeah, I'm looking at yesterday's high as certainly being the nearby target, but we're going to have to obviously do some work there to get there. Again, you know, cash trade, box beef, we saw box beef down pretty well today as well. So, you know, we want to see that rebound a little bit. That might be down early next week again because of this cattle on feed report also. So again, it could be a little turbulent to start the week, but if we are able to find some footing there with Monday or Tuesday or so, I think those buyers, specifically the technical buyers, come back into the market and bring us back up near where we were yesterday's highs.
Okay. Now, as we talk about this feeder cattle market, as you mentioned, limit down on the nearby on feeder cattle, and where does that set us up into this next week?
Yeah, obviously, you know, feeder cattle market limit down and closing limit down, you know, suggests a lower open on Monday, along with a bearish report. So, you know, I think the pressure in the cattle complex as a whole is going to come from feeders. And based on this report, we shouldn't be looking at anything different than that. So that's really going to be the question. You know, are we going to be another limit down day, and is it going to be right off the bat? And then would we hold it? I don't think that's the case, because again, I think we factored in a bearish report. Okay. I think we made a bit of that move before this report. I don't think that this report's going to have us limit up on Monday, but I'm hoping we're not limit down, at least, you know, and even if we are, I hope we do it quickly and then start to bounce back.
Okay. Might be an opportunity to cover some shorts here as we get into the first half of this next week.
Yes, it looks that way.
All right. Now, in the lean hog market, that market has, for the past 3 months, just confounded me with its strength. And we were off on the week, 38 cents down.
Right.
But still, given the number of pork we're producing, very impressive. Where do you expect to see the hog market here next week and beyond?
Yeah, it's been very impressive. I think part of that has to do with beef. You know, as we get into the grilling season, we're going to start looking at the substitute analysis there. But, you know, confounded, that's a good word to use, because you know, we had been trading futures for a very large premium to cash. Cash started to catch up a little bit, but we still have that big premium. That usually doesn't stick around forever. At some point, you could argue for a bigger break in hogs, and we might be gearing up for that after sort of the rejection of the highs that we saw last week. You know, so we could be gearing up for a bit more of a correction. I would think, though, that correction might need to be bought, because again, we're getting into peak demand, and I'm still fairly bullish hogs, especially from lower levels.
Okay, even with the increased production, the demand has proved enough to keep them at this elevated
demand,
level?
You know, I think demand, well, again, we're getting into that season right now, so you're going to have that. But on top of that, I'm wondering if this lower dollar is going to start to spark a little bit more export demand. The hope for the last year and a half has been that China would step in and be a bit more of a buyer. I think that hope might be coming more alive again with this lower dollar. So we'll see. And if we break that market and we can't find that demand, then we have a problem. But I'm wondering if we will find that demand on a bit of a break.
Break it, make it a buy, and
there you
go from there.
Right.
Well, thank you so much, Ted.
Pleasure's mine.
And we will get to market on the Market Plus segment, which you can find on our website, and that wraps up the broadcast portion of Market to Market. But as I mentioned, we will continue that discussion and answer more of your questions during Market Plus, which you will find on our website. And we want to remind you that Market to Market has been airing in some different time slots the last few days due to PBS fundraising activities. So if you find value in Market to Market, please consider making a pledge and investing in a service that provides you with accurate information and timely market analysis. Thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.